Company, okay? Look, it went from this here is very similar businesses. Let's say a restaurant chain in China that has faster growth, better balance sheet, higher returns than its US counterpart, and yet sells at half the valuation. So for us as investors, it's been obvious for a long time that China is the place to be.
Who is like, the world is going to sign up.
So I think that when the deal is done, it will benefit both sides. But again, having said that, we believe that in terms of, if you just look at market potential, we think over the next 2 to 5 years, you'll do much better investing in China than you will in the US. In this period here, if I go back to the shorter term chart, right? We talk to Asian companies all the time. There are no level of tariffs where it's interesting for them to set up factories in the US. They just can't get the raw materials, they can't get the people, they can't get the engineers, etc. So the idea of putting in tariffs and then all of a sudden all these factories are going to blossom in the United States and a bunch of people are going to turn up with hard hats and lunch pails is ridiculous. That's not how modern manufacturing works. Okay, it's a little bit off the bottom here, but look what happened to Haidilao. Okay, yes, it was. Donald Trump wants to do a deal, and he wants his legacy to be that of someone who did a deal. That's his book, The Art of the Deal, right? That's what he's all about. So I think that's where we will end up. $145% tariff is a large number. We have to remember, first of all, that those tariffs are applied on the ex-factory price, so the value as the goods enter the United States. They're not the tariffs on the final selling price. That's the first point that everyone has to remember.
I said to him, the one country in the world that doesn't understand uncertainty.
We do believe that a good result will come out of it, and that the markets will stabilize thereafter. Having said that, from that point on, we still think that the opportunities in China are better than in the US. What's going to happen to the US as a global hegemon? The US dollar is the global reserve currency. And we believe that one of the best hedges or investments in such an uncertain environment is gold. So we've owned gold stocks, we've owned gold ETFs. Asian central banks are buying gold. Asian individuals are buying gold. The governments in the countries that have been selling their gold are typically Western countries. The United States and Canada have been selling their gold quite a lot. There's a lot of people that have bought those Mag 7 at much lower prices. They're going to become forced sellers now, and people want to retreat to cash as a safe haven in these difficult markets. So yes, I think that the US markets will remain under pressure. I would be continuing to look at further weakness in Chinese shares to buy and bounces in the US to lighten up on some of those holdings. I think that over the medium to longer term, China will outperform the US.
Not a journalist, I was planning to ask, but